Hello, 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 everyone. Let me get me on the screen. In case you want to see me, in case you don't, then I'm sorry I put myself on the screen. Oh boy. Well, we had the FOMC day. By the way, for people who don't normally watch the market overview live stream, you might want to go back just from some trading, psychology, and investment stuff and stop stuff and review today's. I think it was very helpful. That's why this is a little late because we went long in there. So we had to discuss some things, some people making some poor trading decisions in terms of changing their stop, avoiding their stop, what I call cannonballing, going in, keep adding to a losing position. So it's actually a really good discussion because on days like this, remember Fed Day, and then you had, I mean, this was the Nasdaq. This was the Nasdaq, and we've talked about, and here you go. Follow. Here's the Fed bar right here, and then just pure, just going on down, taking the elevator down, and you don't want to try to pick key levels unless you get a strong pattern. And even with a strong pattern, you have to aggressively, it's not something like you're trying to buy something and then hold it. And I did not see, there was one pattern I saw, and I'll show you two. But I also put up we also had this. I put this in, I put a couple, I was very busy today, so I only had a couple times to post in Discord. But let me show you a couple things. First off, just to get stuff out of the way, let me say hi to everyone. Let's please say hi. I thank you for being here. Wavy doesn't even want to say Tesla, Tesla, Tesla. If we get that gap fill at 10:55 tomorrow, delivery numbers where you just know the pump. There's so much pump and dump in Tesla, and then you know what? I bet you it puts in some kind of bottom and we get earnings coming out and we get pumps into earnings. There'll be leaks and there'll be this and there'll be that, and then it'll try to get pumped up into earnings again. But let's just even take a look at the bigger picture first again, because even with this pullback, if we have the gap, we still have, I mentioned this yesterday, we're still running around this 1055 area. Now we close back below that, then I'm starting to seriously watch for a bigger pullback. But if we fill this gap, even if we fill it to this open, which a lot of people will be focused on instead of the close, which was actually down here. So do not ignore the open of, please make notes, do not ignore the open of 1073.44. By the way, before I get into that, if you're new here, please do consider subscribing, ringing the bell, and hitting the like button, especially ringing the bell so you get notified of when we do go live. See, we're still with the daily rotation zone. We're still with the weekly rotation zone. We drop below here on a closing basis, then right in here, then it's back to neutral, but then we come into here and it's in a clear path move. Your major interruption is back at 1,000 though. But you're still, it did eke out a higher high than this one. So it's more so, it's what people said, oh, I was bearish, bearish, bearish. But I'm generally overall bearish on Tesla just because I want people to watch themselves at downside and because I don't fundamentally agree with the valuation. But I'll trade it technically, and my viewpoint still doesn't change. And it goes back to neutral if we go up below this 1055, 1053 area. Let's just review some stuff though, because even it could come back down gap fill, and then we could get some more pumps, and it could come back up here. But we'll get warning signs. We'll get warning signs. By the way, there is no potential buy signal yet for tomorrow. There's nothing on the table for that. Well, the couple things I did put in Discord, because these are also good learning lessons. Let's see if there are any other comments. Hey, Waka Waka. Bet Kathy was selling off her Tesla off today and buying up Robinhood. Is that confirmed? Was she doing that? I have not looked at how the holdings changed today. We took a look at ARC in the other stream, and that's looking horribly ugly. Let's see. I'm thinking there'll be, yeah, I'm preparing for a bigger correction coming in. I would not be surprised though to see a couple more bounces and then really get a strong rollover, especially if they're going to continue their hiking. Uh, Hi Shashi, glad you're here. Uh, isn't the move down the market pricing and the rate hike in March? We're not. See, here's the other problem. Every, let's just take a look at the, because for people who don't want to watch it, just bear with me for 1 minute. Here's the S&P. Let's take a look at the S&P bigger picture. This is the S&P bigger picture. We're not even to the bottom of the weekly rotation zone yet. Okay? So we could easily drop a long way and still potentially rotate back up. We could actually, we're right against, here's your weekly. I mean, theoretically, we could find some support right in here and rotate back up, and this resistance shelf pretty much held. NASDAQ looking a lot uglier, but it's not even to the bottom of the weekly rotation zone yet. And I want to take a look at the NASDAQ in terms of the monthly. Look at the monthly. On a monthly, you could even return to 13,600 and then come back up or something. I mean, no, there'd be lots of sell signals on the way down, but that's how overextended these things are, and everybody's panicking off this. I'm not saying it's not. I mean, the breadth has stunk for a long time, and we're finally getting some deterioration, but there's no blood in the streets yet. They're starting to get a little drops of people getting a little worried. Here's your Dow, which has been the least overextended in my book. So the safest play right now is stuff with the Dow and some of the Dow stocks. But let's get back to Tesla. I keep jumping around a little too much. Sorry about that. What I said earlier, I hope people caught it before I even put up these channel lines. Let me take them off because then I put them up, which was this nice little flag pattern. You can see it really well on the 1 hour. You can see that flag pattern. And then we rolled over with the FOMC minutes and the strong selling in the NAS, but that was a little sell-off flag. Boom. People seem to like flags, so I've been putting them more in here. But I put in way before that happened, or right before that happened. I put in, we talked about, and if you're not a member of Discord, you might get some clues. Even if I don't post often, what I do post is pretty good. We broke here and we reversed. So I said I was watching for this level. See this area right here? We broke above it. So this prior resistance should become support. Did it become support? No. What have I called this before? And this is exactly what I typed in. Did somebody look at that post in Discord? I said this is a shake and bake pattern. I'll be watching for a retest of the lows. The only hitch I put in was it was FMOC day, so I'd be watching for momentum bars because I wasn't watching originally because we just dribbled back down, but we did retest the low areas. And I also put in this channel, or this flag pattern, which you see right here, catching on the lows right here from today. And then with that, breaking the flag and rolling over with momentum bars. And then here was a nice pausing area, which this 1094, I already had these lines on the chart from yesterday, this 1093 area, the retracement harmonic. And then I added this level when we paused to this 107 area. Now that was from the recent highs to this pausing bar with your harmonics that reinforced 1094. Got this little pause there, sliced through it, then the next level, which was from the same harmonic, was 1081. And here's the only reversal pattern I saw, which nearly was impossible to trade. Okay, but this is also, I have this on here for a distinct reason, because you do not want to ignore targets on doubles, even if I was right here. You see this little 5-minute double, which boom, boom, and that's not a double top, by the way. It's just two tops at the targets. So you don't want to ignore, that's the reason that was on there. Now for tomorrow, major focus will be on the gap fill, on continued weakness. It favors now a gap fill. I'm going to be again watching that open, that 1073. What was that open again? That open was the open. See, everybody's going to target this end of the candle. They're going to also target the highs, which we've already hit. 1082, what was the lows today? 1081.28. So a lot of people consider that a gap fill. That's not a full gap fill. And it's not a full gap fill to this part of the candle body because the close was here. The gap is from the close price, not from the open price. But people then target the open, which is coming in with the harmonic. So do not ignore this about 1074 area. 1074. Then you get below that 1065.44, which is right before the candle, right before then I'm watching for the full gap fill. The full gap fill again down to this 1063.36. Now for rallies, let me pull this off because we don't use the flags. Don't use the flags for possible resistance again. Use the horizontal base. So my on a rally, let's see if we can get any targets here. This is getting a little difficult. You can watch for tomorrow morning with the 15-minute rotation zone as the first key resistance. You get above there. I'm just targeting this prior harmonic about 1112 with the flat 200. Then I'll be keying off the 1 hour rotation zone, and I will do projections up. It's a little hard to do projections because we haven't any rally up. But you don't get a rally up and then a pullback. Do your harmonic projections. If we don't go to new lows, do your harmonic projections off this 1081.28 level to the upside. And I'll be watching around. This will keep dropping, but I'll be watching around the 1120 area. Then my major target on a rally would be 1131. This prior support becoming resistance, and the top, the 1 hour rotation zone. We're closing right at the I'm going to call this neutral at this point, at the bottom of the 4 hour rotation zone. And again, we're still above the daily rotation zone. So until this gets a close below this 1055, 1050 area, I'm still got to watch for potential reversals back up. That doesn't mean you can't take shorts like going in for the gap fill, but it means I'm not putting on long-term shorts and saying, okay, this is going to 850 or 700 or even back down to 886. It's not the time for that yet. Anything are still shorter-term plays unless we start breaking this prior key support. And remember, we do have that earnings. I think I've seen it. They still have February 22nd, but I think it's more closer to the end of January now. And we will get some more pumps into that, especially as the stock starts going down. You'll have the cast of characters come out for the pump roadshow and leaked emails and whatever else has to happen. So remember that, and you'll also get still, even when it does decline, you'll still get the strong rally days. Isn't this move down market pricing in the rate hike in March? Somewhat, but remember, it's not just the rate hike. It's not just the rate hike. We've had terrible breadth. You've heard me say it on market overview, by the way. If anybody's here who doesn't watch market overview, you're really missing out. We've had terrible breadth, and now a lot of the stocks that have been supporting stuff are starting to get hammered. A lot of growth is getting hammered, and that's what's really been driving these markets higher. And as we talked in market overview today, we might be making a longer-term shift to more of a valuation mode again. And that's like turning a tanker around. It's not a speedboat. It can sometimes take these massive rotations, which we're starting to see somewhat occur now, can take months to really fully rotate. Okay? And now while I will put Tesla in a slightly different boat, although it's a momentum stock that does, that's pumped up, is because of all the pumps and everything else that constantly comes out whenever it has trouble. This is one of the most manipulated stocks I've ever seen in my life. So that's why we could see even more deterioration in the NASDAQ and some occasional very strong rallies in Tesla. And you also have to keep in mind, though, if ARK completely starts to unravel, I don't know, what were they down to? 8-point-something% holdings? Is that lower now? Does somebody have the latest ARK figures with the Tesla? component, because if they really are start to get into massive redemptions and some liquidation stuff, that will definitely put a pressure on Tesla. So I'm starting to miss Elon selling. At least we had reason for the stocks movements. Well, now you have reason for the stocks movements. You have growth stock and people starting to liquidate growth stock. You just can't tie it directly to Elon. Uh, and that's correct. But this is a good comment. Waka Waka. March punch bowl is removed. Last time in 2018, market tanked big. People will still discount it until they actually see it. I've already seen that. Well, they're talking rate hikes starting in March, and there's about an 80% probability now of rate hikes in March, but we'll see it when we believe it. So that's an excellent comment. So, hey, Bob, glad you're here. So let's see. I can say whatever you like to hear. Put You can say whatever you like to. Well, I don't understand that comment, Bob. Sorry. If we trade below 900, that will likely confirm the new monster potential weekly double top too. Well, let's take a look at that. We trade, but we need a close below 886. You get now a close back below 86, then I'm in very big bearish mode. Uh, My chart suggests we sail through 1060 to 1010 area before attempting a rally, which we could easily do. My line in the sand is more like this 1050 area, but we get through there, then I'm in this clear path, and my key area then is, I got to move this down a little, but right here. It just happens to be 1001. So I could easily see us returning to that area if we do get a close below that. And then it will be watching for support there. We get a close below that. Then I will start watching for this gap fill. And this is the bearish case. So we get a close below that. That puts me back in neutral mode. And then I'll start watching for this move down into this clear path. And then we get below 1,000. I'll start watching for the gap fill. Seems like Elon sold the top. Well, Elon sold in a lot of places, including right here. And right here. And whatever other pumps we've had. But he hasn't been selling since, that last week. Since that, when was that last sale? Was it the last week of, let's see, what day was it? I forgot what the last day of the sale was. Elon wants to buy the dip. Okay, do you see the dead cat relief bounce happening for 1,000? Well, again, my line in the sand is right here. I could see a bounce happening. I'm watching again this 1050 area for a potential bounce. And if we don't get it there, and I need to find some kind of reversal signal, I have no long entry signals right now. None. So that would be the first line of the sand we watch. We break below that, then I'll watch the 1,000. We break below that, then I'm watching the gap fill, and do that with still bearish momentum. I'm watching for this 886 potential massive double top on the weekly. Is the lower gap fill 939.50? The lower gap fill is 930. No, that's the high. It would be the close 938.53. It's the close of this bar, not the high. The high was 939.50. The close is 938.53. That's technically the gap fill, but the close and the high are so close. You're again. We're not trying to. Oh, it did hit 939.50 or 938.53. That's within a buck of each other on $1,000 stock, or at that point a $950 stock. You're not trying to get that cute. The 1060 stands in the way. You can call up the. Bro, I just didn't do my bullish line in the sand for tomorrow. My bullish line in the sand is back above about this. We'll give it about 1034. Below there, it's aggressive stops to the upside. Let's take a look at that. Here's your volume profile. Yeah, you do get a fat. You have some key area right in here. See, and then you have the gap fill, which is right at the bottom of there, and then you start thinning out. Then you start thinning out, which is also with the, you can just spot this, a lot of kind of stuff. It's why we also teach these clear path moves, because those are areas that the volume profile thins out. Then look where it thickens up down around in here again. And you had a median line right there. So that's where you can just even start to spot that without volume profile. But here's your 1060 with that gap fill. So, but if we get through here, I'll really be focused on the gap fill, so so many people will watch it and target it. But thanks for that. Thank you very much for that comment, Aaron, and thank you for being here. Uh, all right, let's not go, guys. Let's not get. We don't need to. This is for everybody to grow and learn and help each other become better traders and investors. We don't need to pick on each other or insult each other, okay? Because that does not help anybody become better. Else, I can silence comments. Kathy said, I don't listen to anything Kathy says. I'm sorry. She's a slight of a nutcase to me. Fed made it very, very clear they cannot keep going on without going into hyperinflation. They raised outlook on inflation for 2022 and more. They are. I think they're finally getting scared. And if we keep getting strong employment, the ADP, if employment comes in anywhere in line with the way the ADP numbers, and said they were targeting lower employment, and then it keeps going strong, they have to hike rates. The only way out is a crash or correction, which they're trying to do. I think they need to deflate this market a bit, but I think they want to do it. They want to try to control the deflation of the market, not the deflation. Talking first inflation, the deflation of the market. And I don't think you can necessarily control that, because you take away the punch bowl and it's so juiced up. But it's going to be a process. We're still going to get warning signs. That's why I took a look at the bigger picture, because we're still going to get warning signs in there that we're starting to really break key levels with momentum. And that's where you don't want to be buying the dips. You actually want to be selling the rips. We've been buying the dips, but then when we start taking away the punch bowl, and when you start to have major corrections, 2000, 2001, 2008, you want to sell the rips. And if you're going to buy the dips, you have to be very nimble and very aggressive with stops and targets. All right, let's see. Okay. There's no discount. Again, this market could see anything. And it will be one of the, there's a long way down that Tesla could go. But again, we'll get warning signs before then. We're not trying to call every bottom and top. And if you're a long-term investor, if let's say you're just playing like the weekly time frame or monthly time frame, now the line in the sands is 886. Because let's say you've been it from way down here, you're still, you have risk. You could be lightening up here, but I wouldn't go all out until it broke down here. And because we're not trying to call the peaks. You can always unwind the peaks. That's why I talk about trading around the core position and taking off stuff in terms of strength instead of waiting for key levels to retrace also. But worst case, like even with this run up, you get a close below the six, or you get a move below 62.5, unwind some. Let's say you're long down here. Then you start dropping below here, I'd be taking a lot more off and then looking to reestablish as long as we get a bullish signal down here. Let's take a look at that monthly chart. And then I'm going to wrap this. I've been talking for a long time. My voice is going out. Here's your monthly chart in perspective. Last month, we finally hit the rotation zone and then moved up again. But you can even see that double on the monthly. So even to return to the bottom of the rotation zone on the monthly is back to 700. So there's a lot of room to the downside. But it's got to now fully break down, and this could actually sustain itself through. We could have some dips and everything, but we could get some more strong buys even through earnings, and then it could roll over uh, easily at the end of January. That's why I got to trade the signal. I'm not making predictions. I got to trade what's in front of me on the charts, and right now, my key line in the sand is here. All right. So thanks for that, Waka Waka. Thanks for bringing up that monthly chart. Thanks for staying a little longer today and all the advice. I've learned so much and will always be around. Appreciate everything you do. Well, thank you so much, Wavy. Uh, you're starting out sluggish, but we can only trade the price action. Yeah, we can all have thoughts. Is this the all-time top? Is this the all-time bottom? Is it going to 1800? Is it going to 500? We have to still trade the price action. It's why also predictions are worth the paper they're written on, because predictions can change. Predictions, aren't trades. Predictions are just saying, hey, I could say, hey, I think it's going to 1250, but are you going to trade off that? You'd be silly to trade off that. Unless I had a signal and I said, hey, I have a strong buy signal, but here's a stop. Does every double bottom work out? No. Does every double top work out? No. You got to have a trade signal. You got to use a stop. And if the trade's wrong, you get out of the trade and you wait for the next setup. I think we're going to break down longer term. My gut's telling me to not get overly bearish, and my gut again my gut's telling me not get super bearish yet on Tesla, but it's even on a move back up, I am I'm gonna be raising stops aggressively. Let's just put it that way. And if we roll over, I told you what the downside area is. If there's no buy signals, then I'm going to continue to watch for lower prices and wait for the key buy signals. And also, you can start selling the rips if we do get into bearish mode. Thank you, Sean. Thank you for the super chat. Always super chats, much appreciated. Thank you for being here. Aaron, the inflation trade might be unwinding now. IT started during the pandemic stimulus, watching gold, silver, bonds, equity indices. Yes, and keep watching all those things. You should. We didn't review gold today in market overview, but we. I should have. Oh, I forgot to do this in market overview. I'll just put it up right now. Look at this. Here are the notes. Everybody should be watching the notes too. Things are going to be keying off interest rates now, especially with this breakdown below these November lows. Here was the next harmonic projection, 128.25 roughly area, and look at that with today's low. So if we start getting a bounce, key resistance is now up here in the notes. So if we get a bounce, you can watch for recovery rallies. The two things I'll be watching, if the notes start bouncing and then we start getting some play in, especially the NASDAQ, I'll be watching for recovery rallies, but then I'll be watching for another rollover. So that's a good thing to watch, those notes. Okay? And when I say recovery rally, I'm talking in some of these momentum stocks everybody likes. Other than that, I'm keying more into the value area. With that, I will let everybody go. My voice has run out. I hope everyone has a fantastic evening, and I will talk to you tomorrow. Thanks for being here. Thanks for spending a lot of time with me. Bye for now.